Hello, and welcome to Strategic Tides. Today, we're looking at one of the most discussed topics in global finance right now, the expansion of BRICS and what it could mean for the US dollar. If you're not familiar, BRICS is a group of major emerging economies: Brazil, Russia, India, China, and South Africa. Over the past year, the group has started to expand, adding new members and attracting a lot of global attention. Some analysts believe this could eventually challenge the dominance of the US dollar. But is that actually happening? Or are we looking at a narrative that sounds bigger than its real financial impact? So, what actually changed? BRICS has recently invited several new members, including countries from the Middle East and Africa, like Egypt, Iran, Ethiopia, and the United Arab Emirates. And this expansion is not random. It reflects a broader shift. More countries are starting to look for alternatives to Western-led financial systems. Especially after the sanctions on Russia following the Ukraine war, many governments started asking a simple question. What happens if access to the dollar system becomes a geopolitical risk? To understand the real impact of this move, we need to separate two key concepts: trade settlement and reserve currency status. Because these are often confused, but they are not the same thing. Trade settlement simply means the currency used to complete transactions between countries. And yes, we are seeing more countries, especially within BRICS, starting to settle trade in local currencies. For example, energy deals between countries like China and Russia are increasingly being priced outside of the US dollar. But this is only one layer of the system. The much deeper layer is reserve currency status. This is about where countries store value, not just how they transact. Central banks around the world hold reserves in assets they trust, mainly government bonds. And this is where the US dollar has a structural advantage. The US Treasury market is the largest, most liquid financial market in the world. It allows institutions to move massive amounts of capital quickly with minimal risk. And just as important, it operates within a system that investors broadly trust. So even if trade starts shifting away from the dollar at the margins, global capital still flows into dollar-based assets. And that's what really sustains its dominance. Not just usage in trade, but its role as the foundation of the global financial system. The US Treasury market is still the largest and most liquid in the world, which means global investors, including central banks, still rely on it to store value safely. Replacing this system is not just a political decision. It would require decades of financial infrastructure, transparency, and stability. And right now, none of the BRICS countries, individually or even together, offer a true alternative at that scale. That being said, something is changing. What we're seeing is a gradual shift at the margins, more bilateral trade agreements in local currencies, central banks increasing their gold reserves, and a slow move away from relying exclusively on the dollar. This is not a collapse, it's more like a redistribution of risk. Over time, these shifts could start to have real effects. We could see reduced demand for US Treasuries, slight upward pressure on yields, more volatility in currency markets, and potentially a larger role for commodities like gold in global reserves. These are slow-moving trends, but they matter. So, is BRICS replacing the dollar? The answer is not anytime soon. But is it starting to reshape how global trade and capital flows work? Yes, gradually and in ways that investors should pay attention to. Because in global finance, structural changes don't happen overnight. They build slowly and then suddenly become obvious.